So glad you could join us here on a Monday morning. I'm Marling Bohling with you. And we have some excitement in the markets today. The grain markets went surging higher out of the gate, and they had follow through from the overnight trade. And right before we opened up the daytime session, we had a little extra tidbit of information from USDA. They said we had sold some grain over the weekend, actually, technically, soy seeds. How would you say that? Oil seeds, soybeans we sold. 121,000 tons over the weekend to China. They were back in the market. That's a couple of boatloads right there. Didn't quite see that one coming, but that's very welcome news. And that seemed to help support the trade as it followed through from its higher overnight session. Now let's take a look at the corn market here and see what's going on right now. Well, we had some big gains early, and heck, we still do. We have September up 20 1/4 at 547 1/4, but that's a dime off of our earlier high. That means at one point we were about 30 cents higher overnight. December is now 18.5 higher at 554 3/4, and that's 12 cents off of its overnight high. Okay, what's going on in soybeans? So far, we have the August contract up 6 3/4, September up 9 3/4. But November new crop soybeans are 3 1/4 higher, and they're at 14.05 per bushel. Moving on to the wheat. This is where all the action is today. You have September Chicago wheat now 45 3/4 higher at 743 1/4. 4 cents from our high of the day. December up 44.5 cents right now. In the hard red wheat, this is your Kansas City wheat. September 40 higher at $9.25 cents. And December 41 1/4 higher all the way up to 9.08. That's 4.5 cents from its high of the day so far. Spring wheat trade in Minneapolis, September up 37 1/4 at 924 1/4. December up 35 3/4. In the cotton market, we have the new crop December up 33 points, and right now we're at 84.81 per pound there. Higher across the board, everywhere you look. And here to talk about it, we bring in Chris Swift of Swift Trading in Nashville, in-house no less.
Yes.
And finally, you get to come in on a very strong day in the grains. You've got nothing but plus signs to look about.
Right.
The sun is shining.
Yes.
Maybe too much in some areas. Is the weather playing much of a factor here, or is this all Russian news today?
I think it's a little bit of everything. I mean, when you take it, we've had an exceptionally weak dollar for weeks on end. So to see that export news doesn't surprise anybody. When you see the dollar as low as what it is, we have energy prices really strong this morning, and the wheat primarily targeted by the Russian-Ukrainian ordeal. The weather aspect of it, I was surprised that it didn't impact the beans as much, believing this heat dome is being built up over the next couple of weeks and corn being stronger. So maybe that's just a little bit of oddity in the spreads, but both still higher.
Yeah, we're into the time of year where, I mean, we're almost into August. And this is where, in my mind, it would pose the biggest threat to the soybeans.
Oh, absolutely.
I saw pictures this morning where in some areas, I believe it's in southern Iowa, for example, I think the beans are blooming already. And that's when they're entering their critical time.
Absolutely.
Getting ready to set pods.
And the demand picture is really good, seemingly, for beans, with Indonesia, Polynesia, and India having their droughts this year. They could, the oil seeds, the palm oil seeds and production that they have is a little bit less. They could always help the U.S. and their bean oil production there. And clearly we see as the energy markets continue to move higher that we're going to need more and more of the biofuels.
But I thought Brazil had this big mountain of beans and corn that they're sitting on.
And they do. I'm not real sure why China came to the U.S. for it, but they did.
That is
maybe they needed some and just couldn't quite get it. Yeah.
Are they having trouble getting it out of Brazil? Or
I don't think so. No, I don't think so at all. I don't think I've not heard any port strikes or anything that would be inhibiting it.
A couple of weeks ago, they bought 30 shiploads, I believe, of soybeans, or was it soybeans and corn?
I think a little bit of both, just before the report came out.
Brazil got like 80% of that, I believe, something like that. And yet, here they are, they bought from us today. Okay, I mean, I'll take the business, you know. Now, what about the wheat? I mean, harvest is still ongoing, but it's all way north now.
It is, and really interesting. Now we divide between what we're going to be rationed with this year, having such a low output to it, and next year seemingly like we're going to probably plant no telling how many acres of wheat this spring. That's going to be this fall. So when we plant this fall, with I've heard Dr. Peel was on Friday, I think, talking about how good Oklahoma was, all the drought aspects of it gone. So I think we'll see a large wheat planting for this spring. Excuse me, again, for this fall.
Would you be in a hurry to clean out bins right now if you had corn and beans?
Yeah, probably so. I think it's going to be a pretty good sized crop regardless. Even if it doesn't meet USDA's expectations, they're still going to be pretty good sized crops.
Interesting. Okay. Sit tight, and we'll come back in a moment. We'll take a look at this livestock trade. We had a lot to chew on there with some USDA reports last Friday, and we'll discuss right after this. All right, now we're going to take a look at the livestock trade with a little help from Chris Swift over here. Let's take a look at live cattle. What are they doing now that we're about 45 minutes into our trading session, 40 minutes into it? Live cattle, we're kind of narrowly mixed here, Chris. You have August now down 55 at 179.47. October down 67 at 181.22. But you have the deferreds, February and April. Look at that, up 17 and up 50 respectively there. Spread trading question mark. What do you think about that? Feeder cattle market. Let's go here. August down 207 at 243.85, and you have September down $1.90 now at 247.37. So hovering fairly close to the highs of the day, but still sharply lower on the session. Feeders, when I looked at them last half hour, they were all at least $2.20 lower, and now they have come back just a little bit. In fact, January's back about $1 now. On lean hogs, let's see what they're doing. When we checked them earlier, they were mixed. I guess technically they still are. August up a dime at $100.77, close to the low of the day though. And October down 90 at 83.35. So take your pick. You can look at the nearby contract a little higher, or the intermediate months, which are moderately lower. So what do you think here? How would you rate the performance on cattle rebounding after the report?
Well, the inventory report was pretty interesting. They all came in line with expectations except for the placements, and they were a little bit higher than what was anticipated. A lot of really lightweight animals went on feed in the month of June for whatever reason. I know drought was still a lot of it, but we did place a lot more lightweight animals in that time frame. But I didn't see anything that was very surprising. It looked very neutral. We all know we're short of cattle. We know we're going to be short of cattle for months to come. So the industry probably looking at ways to increase beef production. And there's a multitude of ways to go about doing that, specifically putting more pounds on cattle and bringing different breeds of cattle in for beef production over and above whatever their intended use was. So
I think the thing that was concerning to me was if you have placements that high, is that taking away from your breeding herd a year down the road?
It didn't show. Heifer placement was almost dead even. So I think we've been running at a level right now that is just kind of finalizing liquidation. We're not anywhere into expansion just yet, but we're nearing the end of liquidation.
What was the size of the calf crop?
95.5, I think is what it was.
Okay.
So,
all right. Lean hogs, they're mixed. Any thought on that?
You know, it's kind of interesting just because the cutout has been so much stronger, and we've seen the lean hog index rise too. So generally, after we get through with the summer, we tend to taper off just a little bit. Again, that bacon and tomato sandwich just tends to fall off just a little bit. So we see a little bit lower pork prices as we go into the fall of the year.
Interesting you bring that up. Had one yesterday. Now I'm hungry.
Yeah.
All right. Thank you, Chris. Appreciate it. Chris Swift with us right in studio. He's with Swift Trading.